It's the jumper. I'm just not a massive bid for the jumper. Good evening. Hi, everybody. Hello online. Hopefully people online can hear us. Thanks for coming in the flesh. My name's Nick. I'm one of the semi-OGs of the Oz DeFi Association. If you don't have your t-shirts yet and you want this really attractive when community thing on the back, then you can get them now. The price has gone up a bit. Just supply and demand thing, really. It's just like crypto. It's just supply and demand. They're $50 now. $50 now. This is Mikey. Mikey is also an OG from the Oz DeFi Association. He's deeply enmeshed into the whole gaming world. Ah, there's Nerita. Hi, how you doing? Welcome from Marimbula. Say hi to everyone. Wave, wave. All the way from Marimbula. That's possibly our furthest attendee, I think, for this evening. Has anyone come from like any further than there? Oh, nice. G'day. How you doing? Good to have you here. So look, thanks for all of you coming again. We've got an awesome lineup of people to speak to us this evening. Before I get stuck in, I just want to acknowledge the traditional owners of the land that we're standing on. That is the Gadigal people of the Eora Nation, and we pay our respects to elders past, present, and emerging. So thank you very much for that. We've got a few updates to go first. We've got some amazing speakers. We've also got a panel discussion coming up, which hopefully everyone online, you can submit your questions for as well. So we're going to be monitoring questions a bit more proactively than perhaps we've done in the past, because Mark's been double teaming on the old laptop and presenting. So if you've got questions online, please just slap them up there in the Discord on the Google Meet thing. So Kat, shall we, and look, if you've not signed up to Discord already, hop onto that QR code, get in there. You know, it's a hive of activity, lots of excitement going on in there. Also, because we've got to be true to Web3, right? POAP time. So, yeah, it's Brave Browser as well, which is also pretty Web3. So if you have not got the POAP app, that's POAP app on your phone. Go to poap.xyz, Z, I suppose, but they all say XYZ. Poap.xyz. You just download the little app thing, and then you can slap in your EVM compatible wallet address in there. It's all fairly quick. And then, oh, look at that. You see, look, the little counter. Why did it disappear? People got in there and then disappeared. There you go, look, awesome. There's only 100 to go around. Ooh, supply and demand. Ooh. When moon. So get stuck in there. I've got 3 POAPs now, which is amazing. I reckon as a 47-year-old, I've got about the most POAPs of anyone on the planet. Anyway, so we'll flash that up again after we've done some of the chats with people, so don't panic. You've still got a chance to get it, and you can download it from there. So, what have we been up to? Well, we've all been observing and you know, quietly shitting our pants with the bottoming of the crypto market. Obviously, those super high-quality exchanges like Zipmex, if you need to, you know, find liquidity 24/7, no problems at all, go to somewhere like Zipmex. And I'm definitely not saying that just because Nathan's here. But it's been difficult, and I think what we've got to do is acknowledge that there will be these ups and downs all the time in the market. I personally have got a huge amount of confidence in A, the underlying technology, B, I think the ethos in this space is fantastic. You can get a whole bunch of people in this room, most of which have never met each other before. You can make fantastic connections like Nerita, who will come up here then from Marimbula to come and hang and say hello. That doesn't really happen in traditional space. It's a lot more guarded, so I think if we can keep hold of those sorts of values, then that's fantastic. We have been doing a whole bunch of interviews and chats, particularly Mark and Chris, so well done. Chris, wave and say hello. Chris is busy handling all the audio. We've done a bunch of chats with people. Hop on the YouTube, hop online. We've been talking to different people in the community. Other announcements. Did you want to do these, Mark? Yeah? Give it up for Captain DeFi. Other announcements.
Thank you, Nick. It's, you know, I've got to say, like, these things run so much better when you have help, so it's very symbolic for even projects as well, right? Like, you can try to do it on your own, but you really need, like, more people. That's the most people I've seen upstairs ever for this, so this is great. Well done. Thank you, everyone. So if we can go to the next slide, I'm just going to run through a few quick little updates of stuff that we've been up to. Nearly 770 members now. I think we actually hit over 770, so we're not quite at 800. Woo! Thank you. That was a poor woo from me, but I'm not going to scream into the microphone. We have a growing presence in Queensland. So Matt Hooper, where are you? Put your hand up. So guys, this is Matt. He's flown all the way down from Queensland. We were Australian in name, Australian DeFi Association, but running out of Sydney. Great, right? But now we've officially got someone who's going to lead the charge up in Queensland. We're going to do a lot of stuff out of Victoria with some partners that we're working with there. If you guys have... there's quite a few things going on. I can't actually announce those ones yet, but that's coming soon. And Kat is moving to WA and is going to help us set up our chapter over there. So amazing. We're actually going to have proper coverage and we can actually be Australian DeFi Association. So we're going to go through a few more things there. We've had some members in the media and then some other events that we've attended over the last month. So that's how we do all these. We always have the start is like the, what's been happening over the last month. So you can see Cam, who was going to be here tonight. He's just come back from holidays. So he was talking on the top left-hand side. He was talking about the Ethereum merge on Ausbiz. And they're a great show. Sign up for them, ausbiz.com.au. Harry, who's here. Are you wearing the same? Similar. Yeah. Oh, he washed it though. But Harry, that good-looking man there, was talking about crypto tax, and we'll talk about one of his projects that he's working on, and that's one of the first interviews. We had Nick at the bottom left, giving an update on the call. Nick, like myself, is a TradeFi guy, so sometimes we do talk non-crypto stuff, if that's okay. Sorry. And then we had PD. I don't know if he's online, but he's from Melbourne, and he was talking about Celsius, the crash there. And then Arturo and I in that right-hand side one. Where's Arturo? Arturo? Where is he? Oh, he's my brother. I don't know where he is. We're really not twins. But we were talking about a project that we're working on called TradeFlows and just a few updates on that, decentralized commerce, all that fun stuff. Very simple, not really. The next one, please. We got to see some awesome events. Simo, who's up there, you can see yourself on screen here. There was an NFTs event with Blockchain Sydney. It was a history of NFTs, and Simo got to present along with a few other people. And then at Haymarket HQ, which is on the right, there was something on the metaverse. And so we had a few people from Zrun and the Sandbox and some other places present. And so that was really good. Harry was also at the Binance. It was a crypto tax event. Nick was in attendance there, and Shane, obviously. And then we also had a zero cap NFT event where they had that out at Alexandria. There's no photos for that, but anyway. And then the last thing, we've got a new set of podcasts coming out. We've always had the community series where we interview different members from the community. It was me that was driving it, but we finally had some other people now interviewing each other. So if anyone's interested in podcasts and you want to interview others, we always end on like, what does community mean to you? And you can ask other questions and stuff there, but it's so that we can all get to know who's who in the zoo, and it's a pretty cool zoo. And thank you all, first of all, for coming, even though it's crypto and DeFi winter. Look at all the interest that's here. This is amazing. And can the people online see the crowd? Or, anyway, they can now. Okay, cool. So wave to the camera. There's a camera just here, little GoPro. So that's what you're looking at. They're looking at you, looking into your souls. Nick and I were on a really cool podcast called The FinTech Report, which is coming out in mid-July. We've got a new series called Only Projects. I wanted to call it Only Founders. I was shot down for that one. But, I mean, if it was only founders, then it's only founders. Like, no, we want to talk with people either working on projects, building projects, servicing projects, like doing all those things. So we'll have the community series, then we'll have a projects-related one. And now we get to the interview. So that's it from me. Thank you very much.
Woo! Rapid fire. I love it. Okay, so look, first up, we've got some really cool guests tonight. First up, we have super interesting project called JubiDAO. I've got that pronunciation right, haven't I? Come up here. Come on, you guys. So welcome, Ash and Harry. Take a seat here. Super interesting project, and you will get your chance to shill shamelessly, so don't worry about that. But look, why don't you, I'll pass the mic over to you guys. What I want you to imagine with this little pitch is you're stuck in an elevator, no one's farted yet, so it's okay, but you're with Mark Cuban, you've got, call it 5 minutes to pitch JubiDAO, and we need like pithy, super compelling reasons why people should give a shit about your project. Who wants to start? Let's go with presentation. Cat can drive. Let's do with presentation, your full dog and pony show. So do you want to drive, Ash, first? Sure. Go, brother. Give it up for JubiDAO.
Thank you very much. Okay, so we want to take you on a little journey. It's a journey we went through, and if you're a crypto founder, you probably went through this journey, right? So you got a great idea, and things are really hot. You got white paper, nailed, everything's going smoothly, got community engagement, and investors interested. Now what do? Well, I guess you start with raising a SAFT. But what do you do to raise a SAFT? Well, Harry, tax lawyer here, knows all about this. Tell us about it.
So the SAFT, or the Simple Agreement for Future Tokens, is a very high-tech document which you send to investors and they sign it and they send it back to you. No, it's the opposite of that. You've got to get someone to draft the thing first of all. There's free ones out there, but they are not very good. You find a lawyer. You can finally find a lawyer with some DeFi experience if you look hard enough. And then they cost you $5K. Whoops. And then you've got to actually figure out how it fits into your tokenomics, how you're going to actually issue anything to anybody, how you're going to practically get on top of your administration, how you're going to do vesting. Just going to airdrop it every month? Is that really going to work? Not really the high standard anymore. And some investors, especially VCs, think they're very special and get to have their own special documents, and they have all sorts of demands that you've got to manage, and you have nowhere to say, hey, this is the standard, this is the way that we do it.
So that sounds terrible, because every time you go back and forth with the investor and the lawyer, that's another grand or two, or another unit. Every hour is billable, right? So you go, okay, let's not do it contract-based, let's not go to investors, let's go to community, and yeah, let's do a pre-sale. That's so much easier. Okay, so now we need a community. We still don't have a product. We need smart contracts and adapt to manage our pre-sale. Still don't have a product. We need to hold an event, but nobody wants to put money something if they don't get a coin back. So now you actually got to mint your coin. And the moment you do that, you sit with just as much headache. So what are you going to do about managing those tokens? Well, you basically have either spreadsheet nightmares or smart contracts coming out your ears.
Yeah, the administration really becomes overwhelming. So you've got to figure out how many tokens are going where, who's going to get them, when, how frequently they're going to get them, all sorts of terms. And essentially projects do this stuff manually. And you see it break down where actually projects stop giving tokens when they don't want the price to drop anymore. And you see this immense friction because we're doing things manually. And when you're doing things manually, it's going to take you 6 to 8 weeks to actually get this done. That's 6 to 8 weeks that you're not working on your product, your business, your project. And you're not going to get that back. Imagine if you had to delay your project 8 weeks and tell your investors that, they're going to have a bit of a hissy fit.
So if you could switch to the video, please. This is what we are building, essentially a set of tools to allow you to manage everything yourself. So we built this and launched it today. Nice little dApp. You connect your wallet. You give the details of your project, of your pre-sale, how many tokens you want to sell, the price, what your future token supply is going to be. Everything's super simple. You can see they use the terms and conditions there. Our wonderful lawyer, Harry, has gotten some really good standard terms that you can use, so people are actually going to sign this. We've got invite codes, so you don't have to do white listing of people's addresses. You give them the code, and they use that to invest. And then it actually goes and creates smart contracts for you on-chain. So now suddenly you have something that's smart contract backed, that will manage your pre-sale, manage your soft, and actually sort of be transparent and on-chain. There you can see the invite codes were generated and generates a pre-sale page. Now we can white label that for you as well. and investors can invest. And we actually used a version of this to raise our own round, and we've got some of our investors in the crowd. And here you can see the contract. And in the contract will be all the details of who can claim what, when they can claim, the vesting is taken care of. And so you don't have to worry about it. So we basically want to take you from 0 to DEX and everything in between. So you don't have to worry about managing your tokens. All you have to worry about is managing your project and building your product.
So you're probably wondering why a lawyer would be launching such a project, but I've done many of these raises in the last 12 months. And I have to say, it's a complete waste of time and money that you spend on the lawyer to do menial administration tasks. We've got this beautiful technology that is supposed to facilitate these transactions, and then we can now do it. So our motto is we want to make it Jubi. So Jubi means cool, means chill, it means everything's just relaxed and works. And it's not technical, you've just seen it. Even I could work it, a simple lawyer. We've got some basic stuff that you can just use. You can get some very fancy terms and conditions, that's up to you. The vesting's taken care of, the lockup's taken care of, everything's transparent, which is what this technology is really for. So we've raised 150K US, we're ready to go, we've got dev teams, I'm shilling it to all my clients, whether they like it or not. And you know, we've got EOIs from Upside DAO being one of them, as well as so many other large VCs are looking to use this product, because even managing their own portfolios, it's done manually. And why would you be doing things manually in Web3? It doesn't make sense.
Yeah, my favorite story is one VC firm manages their pre-sales hafts, etc., in Notion documents. And if you're a partner that brought in that deal, you've got to check the Notion document once a month to check which tokens you got to go see if they've actually airdropped them or transferred them or can you claim them, etc. But for founders, it's the same problem, right? Like, you don't want to mint your token and put it on a DEX because then people start complaining about the price, etc., etc. But then the problem is, how do you actually remunerate your team? How do you sell tokens so you got money to actually build? And we'll take care of everything for you with our smart contracts. So that's our ask, basically, is if you're somewhere between 0 and DEX and you want some nice vesting based contracts, you want your soft and pre-sales managed, team allocation managed, reach out to us. JubiDAO.io. All the links will point you to Telegram. Our Twitter's the JubiDAO. Come and talk to us, and we'll take all that spreadsheet nightmare and anything from 2.5 weeks that we spent creating those smart contracts to 3 months if you don't have a lot of devs on that, and we'll take that hassle away and put it all on our smart contracts.
Wow. Mind blown. That's awesome. And I had not seen this pitch before we did this interview, and that is really quite compelling. And I think what we're missing in this space to an extent is this ability to industrialize what have been processes that have been quite iterative to date, done through trial and error, and there isn't yet this kind of pre-canned industrialization that allows you to just sort of... Last question. This is the most copious plugging we've had on this panel, actually, so well done. Last question. You wake up tomorrow morning, you can change one thing in crypto. Very, very short answers, because Mikey needs to take the mic, literally. Go.
Another shameless plug. Everybody's using JubiDAO for every project ever. That's got to be it.
I don't have to explain to my grandma how to install MetaMask.
Good answer. Thank you so much, guys. Thank you. Really appreciate it. Well done. Well done. Mikey, take the mic. So I think we're swinging over to the great Nathan Halliday from Zipmex, I think, now. Welcome, sir. And Mikey, the mic's yours.
Cheers. Thank you very much, Nick. And I'll check the time because otherwise I will go over 100%. 6:23. We've got 10 minutes, Nathan. How you doing? Good. Okay, so a way I thought of that you could get a little bit of a pitch and just let everyone know what Zipmex does is, I know we've got some Immutable folk in the room, so I believe they've recently launched a $500 million investment fund. I could have that number wrong. I hope I don't. If I do, Nick, it's your fault. you have stepped into an elevator with the head of the Immutable Investment Fund. You have 3 minutes, which I'm going to time, to explain what your value prop is. Go for it.
Perfect. Thanks, Mike. So Zipmex, we're a CeFi traditional exchange based across Southeast Asia. I expected a lot more booing from a DeFi crowd for that, but we'll continue. So we effectively allow people to buy, sell, and trade over 80 assets. We're licensed and set up in Singapore, and we operate across Indonesia, Thailand, Singapore, and Australia. I've got around 2 million users across that region. So we focused very heavily on that Southeast Asian region. So if you're Immutable, lots of gamers in Southeast Asia, that fund is all about GameFi. And we actually work with a lot of gaming guilds, up-and-coming projects, and help them to get listing, which, yes, shouldn't be all based on hype, but, you also don't want projects spending all their money on marketing. So where we can help, bring your product and the utility of your product in front of 2 million users, that's what we try to do effectively in that space. But our core philosophy is simply every exchange is buying and selling the same assets, right? We're all selling the same picks and forks here. We try and focus on how do we provide as much value as possible to our users and our customer base, and that's through simple things like low fees, tight spreads, which a lot of people don't look at, and then utility again. So whether we have new assets that are coming where you can stake and earn, whether we have the standard sort of earn yield products on our listings as well. So that's us. Thanks for your 500 million.
No worries. It's a good market, Southeast Asia. I actually run a gaming guild, so we should probably have a lunch, have a chat about that. So the first question I wanted to ask was related to, I guess, the CeFi, DeFi sort of way of looking. You are sitting in a room full of what I would assume are DeFi converts, given we are the Oz DeFi Association. So where do you see the role of like a decentralized exchange and a centralized exchange working kind of 3 to 5 years in the future?
Yeah, it's a great question. I've spoken to a few people about this. I'm a big fan of DeFi personally. I play with a lot of the different equipment and different assets that are in there. I use DeFi myself. I think Web3 as a whole doesn't have the user experience that it needs yet to onboard the next billion users. Right? So, as we were saying, tell your grandma how to set up a MetaMask, transfer it to layer 2s, interact with this protocol. You just read about hacks and scams constantly. It's things that traditional finance people, or I guess the normies, worry about and don't know how to do effectively. That will come. That will definitely come. But I think as a traditional CeFi exchange, we see our role as helping to onboard users in a simple, seamless way, connect to traditional financial rails. So regulation is accelerating very quickly, and we'll see that again through this bear market. As this gets bigger and bigger, there'll be more and more people looking at how do we protect both economies and consumers. So, we do a lot of work with a lot of regulatory bodies, KYC, again, another ugly word for DeFi. But, these sort of things become more prominent for you to move funds between, traditional finance, your bank account, into the decentralized, assets that we have. So very much I see CeFi as still being the gateway to crypto. We bring newer users into the space. We help them understand it. And then ultimately, how far down the rabbit hole and how much red pill they want to take is really up to them. That's definitely been my journey personally. And we see that with our users as well. So actually, I would say as a centralized exchange, we have a sweet spot where we want people to know plenty about crypto, but not too much that they're off running everything themselves. Yeah. But yeah, I think for that sort of major on-ramps, off-ramps, rails, the centralized exchanges will definitely still have a place. And I actually see a lot of decentralized exchanges and technology starting to become implemented into CeFi. So again, the different DeFi protocols that can interface directly into CeFi products and allow those two ecosystems to connect further. That's where I see the future.
Yeah, no, it's funny. A couple of months ago, I had to explain to a friend who'd been in crypto for a couple of years how to use a cross-chain transfer, like moving from Matic to Ethereum or vice versa. Oh my God. It wasn't even my grandma. It was really tough. So there's definitely room for both DEXs and sexes to work. Sexes. Okay, sorry about that. Didn't mean it. I said it. Second question I've got, and this is an interesting one given where we are in the current market and some of the causes for that. With what Zipmex does, you really need to be guarding yourself around the same kind of issues that have befallen something like a Celsius with like a lending protocol and other exchanges. I was curious to know what you guys are doing to be able to do that, and is there something, or at what point would it force you, if ever, to actually block withdrawals?
Yeah, it's a great question and definitely very pertinent at the moment. If I look at what's happening in the market, effectively, we've pretty much been in the bear market since November. Interestingly enough, through Feb, March, the market was propped up through Luna buying mass volumes of Bitcoin, right, which was around all around that algorithm. Obviously, when it collapsed, mass liquidations of that. The following on from that is roughly a month down the track. But if you look at what's happened with Celsius, it's well known now they had around 500 million in Luna, right? So they've lost a big chunk of that, similar with the 3O's Capitals of the world. You exacerbate that through leverage, effectively. So these guys were using leveraged positions, quite heavily leveraged positions, to place, effectively bets on the market, which is how they're generating those yields. When they lost the collateral through Luna, they didn't adjust those positions, and then when they got down to a liquidation point, they no longer have the capital available to defend that, which is what's caused the next cascade of liquidation. So simply put, we don't know yet who else has been affected. Like, there's definite contagion in the ecosystem right now. It took a month from the Luna collapse to the Celsius and 3O Capitals, right? So now, who else has been impacted by that? It's going to continue to wash through a little bit at the moment. A lot of people are comparing it to the traditional finance GFC type event. I think that's a fair comparison in different ways. In terms of what we do, we don't use leverage as a starting point. We've got a very traditional finance team that have come out of banking effectively, right? And that's who runs our treasury team. So we would like to think we have very strong risk management where we don't have too much over collateralized in any one place, and that we manage that very closely. We have, within our yield product, we don't have any locking mechanism. So a lot of exchanges will say lock your assets for 30 days, 60 days, 90 days, 6 months, right? And we'll give you better yield. We actually don't offer that. So it is instant withdrawal deposit at any time, which enables that. Now, if you see effectively what happened with Celsius was it became known they'd been impacted by Luna. There was a lot of fear, uncertainty, and doubt around that, and they experienced a traditional bank run. Right? And when they had the bank run come through, they no longer had the assets available because of where they were deployed. We, I guess, manage that very, very closely. We've definitely been watching our levels over the last couple of months, or particularly the last few weeks. We've seen a drop, but nothing significant that caused concern. And actually, we started to see that going back up now, which is interesting because I guess for us, again, we work much more in more non-crypto, full literacy type aspects. So I sit here and go, oh my God, look at the world's caving in. And then I go and speak to customers and, they're traditional finance people. They're not, looking at the overall ecosystem. They don't look what's going on. And a lot of them are actually going, well, this is a great time to start accumulating and buying the dip. So we've actually started to see people now adding to that position. And whilst we've had crypto withdrawals, we've seen traditional money flowing in that, is starting to turn that back the other direction. So yeah, long-winded answer, but effectively, we have very strong ex-banking executives that manage our treasury, traditional finance, risk management, and that's how we're managing it effectively and just watching it all very closely.
Good answer, I think. For all the finance people out there, you can let me know if that was a great answer. No, okay, so what I got from that as someone who's more like a community marketing focused human being is that you guys were not over-leveraged on something like a Luna or over-leveraged on anything in one particular space, which gives you diversity and allows you to not completely shit the bed when things go wrong with something like Luna. That's what I got out of that. Last question, and we've got about 1 minute, so keep it relatively brief. 6 to 12 months, where do you think the market's going? Is this going to be another 2018-19 crypto winter? Do you think we're coming through? You kind of did touch on that at the end of there, saying people are kind of buying into their positions again, but just where do you see as an exchange the market going the next 6 to 12 months?
Sure. So I don't think anyone threw out the standard non-financial advice disclaimer, so I'll just quickly check it. But that's the longest I've been to a meetup without that coming out. But ultimately, I think it is very interesting times. The global macro environment is something that crypto has not experienced previously. So to compare previous cycles, I think is a little bit dangerous because the overall environment has changed rapidly. I certainly think that at the moment there's no rush, everything, oh, is this the bottom? Isn't it the bottom? What we have seen traditionally is periods of accumulation when we do see the types of drop-offs that we had at the moment. I think that will be the case for the next 6 to 12 months personally. If I look at price action, we dropped down to the 17K US and we came straight back above 20K, and that 20K is the prior top, which is a pretty key level of support. So that was very pleasing. And yeah, as I said, I think we will see opportunity over the next 6 to 12 months to accumulate the great projects to emerge and to build and to focus on what their core product is. And that'll, create the next wave and the next cycle when things come down. But whilst we keep seeing interest rates going up, I think we're going to see a continued market like this. When that starts to plateau and level off, that'll bring a lot more certainty back to traditional economies, and that will allow funds to start flowing back into the space. So that's what I'm expecting, but the market loves to kick you in the ass. So every time you think you know what's going to happen, it does the opposite. So yeah.
Nathan, thank you. That was actually very insightful for me. I hope it was for everyone else. And you're all done. Are we doing any Q&A? Like 2 minutes? 2 questions? Guys, 2 questions. Only 2 questions. I'll come around and hand out the mic. Has anyone got a question for Nathan? Nathan, you're on a 45-second to 1 minute response to each question. Yep.
So the question, just for those at home, was why do we only have 80 tokens, or certain exchanges have 80? Yeah, no. It's a fair question. And why do others have 300, 400? If you look at the traditional market cap, right, on crypto, like there's really 2, 3, the top 10 are absolutely dominant. As you start listing additional assets, particularly for us where we're licensed in Singapore, it costs us, 50K roughly to do our due diligence, to get the right opinions, to set it up, and that expands as you add more chains. So simply the value that we look at versus additional tokens is quite low. If you look at the guys that have 400, how many of those have active trading volume on them through those exchanges? You can see things hype and get lots of volume, and then they drop away to nothing. So we've focused heavily on the top assets, or working with partners that we know are building utility and are building ecosystems that we can help grow to the level where they do start looking at the Binances or things like that. So you'll see some with 10 to 15, and they do very well in terms of their total performance. Yeah.
One more up the back.
Great question. So the question was, where do we see regulation coming in the next 6 to 12 months? Based on what's just happened, I suppose is the key thing there. Look, I think we're going to see more on advertising standards. That'll probably be the first thing, because they can do that under existing frameworks and legislation that exist. So that is what I suspect will be one of the first things to happen. Beyond that, there's been a lot of work going on through Blockchain Australia with the Australian Treasury Department. There's been a bunch of recommendations that were made and were accepted. However, that was by the prior government. The current government seemed to be, interested in continuing that work, but I'm certainly taking a bit more of a wait and see approach. So I think we'll see much more on advertising standards quite quickly. The remaining aspects, I suspect in the next 6 to 12 months, may have further conversation with industry, and the new government may need to get a bit more familiar with the space and what's happening before they decide on what the positioning will be. But certainly globally, we're seeing that accelerate, right? The SEC in the US, definitely will start to ramp up a little bit more, I believe, particularly on what they consider to be unlicensed securities and financial products. And I think, like for us, based out of Singapore, that's probably the most thorough jurisdiction in the world in crypto at the moment. And so we work very closely with the Monetary Authority of Singapore there on what their standards are. Things like the travel rule, which, for those who don't know, if you send your crypto, the Financial Action Task Force say you need to say what wallet it's going to, and we need to match that wallet. That's starting to come into effect in Singapore at the moment. So things like that will slowly wash through. Whether that's applied here, the recommendations were not at this stage. But yeah, those are the sort of things we'll probably see more of globally.
Nathan, thank you. That was great. Alrighty, on to the next. Shane from Crypto Tax Calculator, you are up.
That golden bullet was a disposal of $50 for tax purposes, and you just fired off 100 of them. So, you know, how are you going to go about doing the taxes on this, given how many bullets you fired in the last hour in this video game? You know, that's just one scenario. A larger problem is in the DeFi space in particular. I was actually working on a DeFi, like a decentralized exchange, prior to working on Crypto Tax Calculator. Back in 2018, the regulatory environment was very suspect. You know, there was those issues with Ether Delta at the time with KYC. That got me quite concerned about, you know, the ongoing risks of building such a project and jail time and such. So, you know, I moved into something which I thought was safer in terms of providing value to the ecosystem and touching a real pain point, which was crypto tax, because I had my own tax nightmare. But I mean, the KYC is a major issue in DeFi, and I was really attracted to DeFi around kind of, you know, the openness of the system, that you can actually see liquidity, etc. You don't have to trust the centralized entity. More to the point, you're using software with things like smart contracts to basically outsource, you know, tens of thousands of lines of code. Usually within a traditional exchange, you just kind of within the block, it throws if either side of the fund doesn't have anything, and you don't need regulators, etc. Like, it's all just there. But there are the traditional rules that still, you know, exist in the real world. And, you know, there's certainly a clash of mentality that's probably going to play out over the next 5 to 10 years. And everyone understands, really, you know, it's the elephant in the room is KYC. What people don't really understand is the other, even bigger juggernaut in the room is actually tax. So it's one thing to have anti-money laundering rules that governments are trying to enforce because they care about, you know, terrorists getting funded, etc. They care a whole lot more if they can't recover funds from their citizens to pay for military and hospitals and infrastructure and all these types of things. We probably, you know, arguably not going to live in a world in the future where taxes don't apply. So how do you have that long-term perspective? You know, how does that collide with the DeFi world, with all the benefits and technological advancements that, you know, smart contract systems provide, etc. So I thought about that problem quite a bit. The answer from my perspective isn't to have taxes at the entity level. So you actually, hey, Immutable, you don't have to collect social security numbers or TFNs, etc., and report all of these gun bullet transactions to the government so they can chase after all your players, which is obviously going to cause heaps of friction from a sign-up perspective, etc. But you can actually look at doing the taxes and doing the reporting at the network layer, because all the transactions are open and published, and you just need the kind of right parser to work through and kind of transform this data that's already on the blockchain into a fiat-denominated central ledger, and have that fiat-denominated central ledger across, you know, the L1s like ETH, or I think there's Immutable X, etc. And you can kind of gather up everything, and now no longer do you have to worry about all of these different entities essentially going through all this manual labor to report back to the government. You can actually have the network itself just printing off in real time. The government can inspect this. You've got a ring around this ecosystem, which is the KYC of the end on-ramps and off-ramps, as we already understand. That's kind of the position that I think the DeFi community is trying to take. And hopefully, you know, such a perspective gets adopted and we don't have burdenous rules on the community, such as, you know, forcing Uniswaps and the likes to collect social security numbers, etc. Yeah, which would probably kill a lot of the benefit that we have in terms of friction, etc. with DeFi. So, yeah, if you've actually gone to do your crypto taxes, Immutable VC guy, then you know, you'd probably also understand the pain point. Like, it's a very real pain point in terms of trying to work out your tax obligations when it comes to cryptocurrency. Some members in the community have argued it's too burdensome, let's just make it all tax-free, and that's probably not actually going to fly with the government. We need to come up with better solutions so that it's easier for users to report their taxes to the government. Otherwise, they're just going to step in and kill the show, essentially. So that's what we've set out to do, Crypto Tax Calculator. Started in 2018. as a one-man band being myself, but now expanded into about almost 50 people at this stage. Yeah, probably talked way over 3 minutes.
It's all good. It was an issue with the elevator. You got stuck. Real fun. I mean, I took a couple of things from that. One, I took the fact that I'm in GameFi and trying to figure out, I mean, I've had numerous conversations with Harry about this, trying to figure out what my tax profile is in GameFi with all these horse assets and racing, et cetera, et cetera. Like, it's just, it flies over anyone's head who's not actually in a tax kind of role. So something like what you're doing, particularly in a GameFi perspective, is really, really important. I've only got a couple of minutes, so I've got a couple of questions that we could get to if we've got time on the tax side. But something that I wanted to drill into with you, Shane, was that you founded Crypto Tax Calculator in March 2018. Now, I don't know if everyone who wasn't involved in crypto in March 2018, it was worse than it is now. Or it felt like it was worse. It ended up going for about 2 years. 2018-19 was not a good time to be in crypto. So to be founding a project in crypto in March 2018 and getting through the next couple of years, that must have taken something. And I'm really curious to know, I'm sure there's a few founders in the room, and this is one of the main questions that I wanted to ask you from more of a founder perspective rather than the company perspective. What are some things that you felt like you got right in that period, and what are some characteristics that you felt like you needed as a person to get through what was kind of the big crypto winter for the people who might be thinking about founding a project now, potentially going into another one?
Yeah, so I'm pretty sure there was something wrong with me. Like, you know, like you go into 2018, it was March, it came off the top, like ETH was 1,500. I think at the time it was maybe like still like 1,000, right? And while working throughout the project, I think the bottom was in 2019 or something. It went down to $88 from when I started. So it's still like a 90% drop in what already felt like a bit of a blow off on the top. You know, it's hard to imagine that scenario playing out again, but it could very well happen given, you know, as was pointed out previously, like there is certainly different macro conditions, and crypto came out of the GFC bubble, GFC, which was the last proper bear market. We haven't had a serious bear market in 14 years, and the average is every 10, so we're 4 years over. So it's definitely concerning what we've got ahead of us. I think for me, the reason why I kept on pursuing the project, and it certainly wasn't easy, like at the time, it was just myself. We were unfunded, so it's just I at this stage. You know, it's me late at night on the computer, coming home from work, because I was doing contracting at the time, because I'm broke. The ETH price just kept on going down, right? And so... you know, you got these conversations with people, you're like, well, you know, I'm doing this crypto thing, and people go, what? And it's like crypto tax, you get the eyes rolling, you know, the family discussions, you know, your partner, your girlfriend wondering, what are you doing with your life? Like, you know, why aren't, yeah, it's actually totally brutal. And yeah, it just grinds out for like 2 years as well. So there's certainly some capitulation moments. Yeah, the bad bits. Yeah, I mean, there's definitely like moments of capitulation. I mean, I don't want to paint a sorry picture for anyone going into this if we do go into a bear market, but I think the point was that you really do need to persist, because, like, you know, if I had started now, it's kind of like you want to be there for the next run. Really, it takes time to build out that system and the structure. And it's all speculation as well. You don't really know what's going to happen in the future. I mean, we could take a bear market for 3 months. It's just a slight correction, and then the Federal Reserve drops their pants and starts lowering interest rates again because it's too bearish or whatever. Like we don't know what's going to happen in the future. So you just got to keep on pursuing it. I think if what drew me back to this project after periods of capitulation was the fact that I still had users hitting me up, I still had a genuine pain point. Like, the people I was dealing with were like desperate for a solution. I didn't really feel like the market was really addressing the real problems with the space. Like a lot of the competitors out there, they're much more focused on like centralized exchanges and just passing data from centralized exchanges. They're not really thinking about building up a data model of these kind of like the underlying network. So I just thought that there was still long-term a really genuine pain point that hadn't yet been solved, and that's what kind of kept on bringing me back. Fortunately, ETH didn't just go to zero. We've still got an ecosystem, and it's been quite extensive now. There's heaps more people in the space. It's definitely not like it was back in 2017, where it was just like ICO boom. And I remember, like, you know, the Airbnb clone on blockchain, I think it was B token. That was a great ICO to get into. Yeah, there's definitely a lot less of that, and there's actual projects now, like Uniswap really like killed it essentially with decentralized exchanges and making that kind of a bit not necessarily mainstream, but far more accessible than anything else prior. And there's certainly other projects that look really interesting and definitely have genuine utility. And I think people in the space are not just trying to get rich quick anymore. Like we went to startup kind of like crypto group meetings back in 2017. It was a totally different vibe to what we've got right now. You know, it's just smelt like people trying to get rich quick off ICOs, and now it's definitely not like that. So we'll see what happens, right?
That's a good answer. I mean, I took a couple of things from that, and I'll pass to one question from the crowd in a sec. But what I took from that was a couple of different things. One, you need to have persistence. Two, if you're going to have persistence, you need to really believe in your product rather than just be trying to shill an ICO like what was happening back then. And three, even though we're going into what looks like could be a lower market now, the ecosystem is so different to what it was in 2018. There's just so much more support and so many more good projects coming out now, and that changes what it would feel like to go through something like that now rather than back then. I think we've just got time for one Q&A from the crowd. So rather than me asking my tax question, I might just open up to the crowd. If you've got any questions about being a founder, we've already got a question. What is it, good sir?
That's a good question. So we've got relationships with, say, CPA Australia as an example. We work with well over 1,000 different accounting firms across Australia, H&R Block, that type of thing. So 2 years ago, you had to talk to an accountant about crypto tax and why they don't have a solution for that, and they just look at you going, what the hell is cryptocurrency? None of my clients use that, go away. That's totally changed. We've got, like, you know, accountants drumming down our doors now going, please give me a solution. This stuff is so painful to work out with a CSV. I need it desperately. So yeah, it's pretty strong. We've been, you know, engaged with members of the ATO, but fairly informally around, you know, just trying to get clarifications on different guidelines and views that they might take on certain transaction categories, because obviously as an engineer, I don't want to go about building stuff that isn't even going to be necessary, essentially. The ATO itself and probably other tax authorities, they're still really forming a view on how to really address this problem, but they're very aware that there is a problem and that there is a huge tax gap. It's not really super pretty outlook from that perspective.
Shane, thanks for coming up, man. Appreciate it. Cheers. And that's me done. I believe Mark is coming back on stage.
Thank you. Mikey, everyone. What a great host. So this is the part of the session where we've got announcements. We've got two people that are doing announcements. We've got Professor Ron van der Meyden here, but up next. But first, we will have Phil Laffenberg from Web3 Academy, and his slides are up on screen. And when we switch over, we're going to just take a few minutes just to get Ron's one up. It's on email, so just prompting you. Phil, welcome.
Thank you. Thank you, and hey, everyone. Let's see how long I managed to stay here without Charlie this time. Hello, everyone online. Okay, Charlie's allowed to come if she wants to. Cool. My name is Phil. I'm from Web3 Academy. We are very proud. Oh, okay, we jumped the first slide already. We just recently formed a partnership with Bankless and For the Win DAO as part of their education program to educate people scouting for projects. Why does that matter? Because our mission is to educate and build the professional skills necessary for people who want to work in the Web3 space. A part of that, what I want to talk about today, real quick, is tokenomics. Tokenomics are basically the fundamental building block of these economies. They are all tiny microcosms and their own economies that need to, over time, figure out how to be self-sustaining. What we have done now is to create a short masterclass, 90 minutes, rapid upskilling, to go through the most fundamental things that that anyone who's interested in tokenomics, who wants to learn more about it, can go through. So from the fundamentals, how to balance this micro economy from the demand side and the supply side. There are like 5 levers that you can, if you analyze a project, if you're interested in understanding how the underlying fundamentals work, very simple process to go through and see what is important. And we will give some practical real-world examples. That is going to be part of the program that they're running in Europe a little bit later in the year. But since we're here, there's something that I want to give because I love the community. Thanks, Mark, for putting it all together. I get so much value out of the Discord and reading the cool conversations there, that we want to do something together with you. I want to do something together with you. And that is shaping the course content a little bit, shaping the content of this a masterclass together, and that is understanding which examples would you be interested in learning about from a tokenomics view.
If you go to hashtag competitions in the Discord, I think I set up the channel. I might not have set up the channel, so maybe check it tomorrow or later tonight. But basically in the Oz DeFi Discord, if you haven't been in the DeFi Discord, what are you doing? Go to defi.org.au. And there's a big blue button on the homepage and it says join the Discord, because that's where most of the fun stuff is. There's a lot of other resources there. That's probably the most important. But once you're in the Discord, many channels for different things, NFTs, Metaverse, GameFi, all that kind of fun stuff, even regulation. But competitions is going to be a new one, and Phil's going to post some more kind of details there. Okay?
Exactly. So that is actually the main reason why we're here. Go join the Discord channel and be part of the conversation. So competitions, anyone who's sharing their project that they want to or would like to see in a masterclass is going to enter a raffle. So we'll just take a snapshot. We'll announce the exact time in the channel today or tomorrow, whenever it's up. And then we will hand out 5 free tickets for this first masterclass that we'll run here. We'll define where we want to do it. Is it online or over Zoom? Do we meet in the metaverse? Are we finding a space here to sit together? So that will be for the 5 people. And anyone else who was not the lucky draw will get a hefty discount, and the whole community gets discounts. If you want to do something, just reach out. We're here to learn together from each other, with each other, and that's part of, very close to our heart at Web3 Academy. So jump on the channel. I'm sure you will get notified in some ways, however we can reach you. And looking forward to all the suggestions of projects, because we want to make the content most interesting for you guys. So this is our way of collaborating on those masterclasses. Cool, thank you.
Sorry, Marco. Thank you for your patience, guys. As you'll appreciate, it takes a whole village to put this, show together.
If you can help with your email. Okay. So Professor Ron Vandermeiden, if you want to come up. Prof is from UNSW, my alma mater, which is great. We're just trying to get your presentation up on screen right now, but if you just want to maybe start, yeah.
Yeah, I'd just like to present something very quickly about sort of connecting the universities and the research sector more generally with the ecosystem. If you're doing a startup, you can go out and get VC funding. In the universities, we want to do a project. We typically go out for government grants, and there's a couple of opportunities that we're working on at the moment, all of which require that we have industry partners participating in our grant application. So for sort of joint projects between the university and industry. One of those, the slide will come up on there shortly. One of them is that the New South Wales government, you may have heard of the sort of tech central idea for the whole area from Haymarket through to Everleigh in Sydney, is going to be a big sort of startup hub. There's Atlassian and Canva already there, and a lot of... so the New South government vision is that for the whole area to be a big sort of innovation and startup hub around technology. Okay, so the first slide here is who are we at UNSW. So I've got a group at the university that's a very interdisciplinary group, so you can see all the different departments there, from computer science through to law and business, economics, civil engineering even, and we've got people that have conjoint appointments who are researchers at Data 61, so we have good connections with them. And we have a website there that you can go to, blockchain.unsw.edu.au, and you can see some of our activities going back to 2016. So this New South Wales Government Tech Central thing is that, so the idea is that whole area, Haymarket through to Everleigh, is going to be big sort of startup hub, tech innovation, and the New South Wales Government is presently putting up a fund of around $8 million for research infrastructure. That usually means things like pieces of equipment or data sets. Research infrastructure for the blockchain area. Blockchain is one of the nominated areas that can apply for this fund. So what we're proposing is seeing is that equipment doesn't make a whole lot of sense because we don't have specialized equipment in this area outside of mining rigs, which we probably don't want to touch. So instead we're proposing more of a sort of social infrastructure thing that will be a sort of innovation hub for connecting up the research sector with the industry ecosystem. So for things like a meeting space, sort of hot desking, support staff that supports multiple chains. We want to be blockchain agnostic. But have an environment where if you've got a project, you want to do some testing out, do some research, see what chain should I run my project on, then there'll be some tech support staff to help with that. A business development manager for helping to connect you with researchers that you might do a research project with, and other things like a sort of demonstrator environment, test environment. And together the university would be contributing in seminars, short courses. Hopefully the space will be large enough for meetups. And we're trying to connect also to VCs so that we can have some sort of incubation capacity there for projects that are coming out of the university or for help with the industry. So that one's due at the end of July. So if you might be interested in collaborating with the university on that, reach out to me. Also, we're working for the same deadline, in fact. CSIRO has what's called the Next Generation Graduates Program, which provides funding for a cohort of 10 or more students from the level of honours students through to a PhD. And there would be scholarships for these students that would then be partially funded from CSIRO, partially from the industry partner, and the industry partner would be expected to provide some internship opportunities for these students as they're going through their degrees, so they get some industry experience. So this program sort of is about capability development, developing highly qualified staff that might then go into your companies. And then finally, the research innovation, the blockchain hub that we're proposing, the funding for that particular scheme is for 2 years. So there's a question then, if we set something up, how do we sustain it? Well, we'd be going out for additional grant opportunities to bring in more money to get a sort of sustainable thing. And one other one that's coming up towards the end of the year is the ARC Industrial Transformation Research Program, which again provides funding for PhD scholarships plus postdoctoral qualified research staff to work on projects with industry partners. Okay, so that again is a sizable amount of money. That's a 3 to 5 year project, that would be. So if you might be interested in connecting with the university on any of those things, please reach out to me. And just a shout out also, I had a blockchain seminar that started way back in 2016. It's been a bit quiet over the pandemic period, but we've just restarted it. So that will sort of focus on sort of research-focused presentations. So things that are happening in the research community will be presented there. If you want to see the announcement for that, I suggest just follow me on Twitter, and I'll post out announcements about things that are coming up on Twitter. Okay, that's all I've got to say.
Thank you, Ron. University, brilliant, but there's only one S in focused. Just a hat tip towards you there. No, hey, but it's blockchain, so it's not like English language or anything. Sorry. That was a low blow. Okay, we are going to dig into layer 2. I mean, I say digging, you've all been very patient. It's maybe like we're going to skirt the surface. It might be a bit of scraping here rather than deep digging because of time constraints. Panel conversation. If you're a panelist, can you come up here, please, now? And we'll kick off. So I can see Howie is in his wintry jacket there and his Immutable merch. Hello, sir. Good to see you there. Good to see you there. Hey, how are you? Hey, we've also we brought in a chef here from the pub round the corner. He's just finished his shift. Usually he's on the deep fat fryer, so we're lucky that his threads are clean this evening. Folks, thank you very much. We're going to have a quick dig into layer 2. Really quickly, name, firm, and that'll do.
So my name is Howie, Immutable. Not the head of the IMX fund, unfortunately. I do economy design on Gilded Guardians, one of our games.
My name's Jazz, and I'm a lawyer at Kingwood Mallisons in the financial markets. Thank you. Financial markets and derivatives team. So I'm in the fintech crypto side of the practice.
I'm Arturo, and I'll be representing NotCentralised tonight.
Cool, thank you guys. And look, just lob questions in from the audience, by the way, while we're going through this. For all of you, but interesting, let's keep this snappy. Current issues with crypto and why layer 2? Who wants to start? Yes, go, big fella.
All right, so I guess we should define what a layer 2 is and what a layer 1 is for those that don't know in the room. So a layer 1 is something like Ethereum, Solana, Avalanche. You got your base layer protocol. Blockchains have blocks, and blocks are finite in terms of space, right? So people come in, they want to transact, they want to get their transactions in a block, so they have to pay gas. How different blockchains handle that is, it depends. But let's stick with Ethereum because most layer 2 solutions are kind of built out on top of Ethereum. So with ETH, you have to pay gas. And to handle this congestion issue when there's high levels of traffic within a given blockchain, there's a fee market. So people have to compete with each other and they pay more gas. And the more gas that they pay, the more likely they are to kind of get into an advantageous position within a block or within a block at all. So we've seen that these prices have been incredibly expensive over the past few years, up and down, depending on demand. We saw during the Bored Ape land sale, it was the highest it's ever been. It was soul crushing. It was like 1 to 3 ETH to put a transaction through for like the 4 hours that was happening. So over the past couple of years, people have been developing scaling solutions. We saw that in December 2021, around that time, ETH came out with their roll-up-centric roadmap. So before it was all about plasmas and sharding and state channels and those kinds of things, and they've moved on to something that's a little bit more elegant in roll-ups. So those things are more robust, they're more general, they're EVM compatible in a lot of instances. So that's kind of I think what we'll be focusing on today because Immutable has their own roll-up platform. You have 2 species of roll-up effectively. You've got optimistic and you've got zero knowledge. And those each come with their own trade-offs, their own risks and trust assumptions that move around.
For the non-technical people, think of it as we have a set of banks, and banks talk to each other through the phone or fax, right? And reality is not too far from that, right? It's really shitty. So what people have done is that they build on top of this a communication layer that effectively is like the internet, right? And layer 2s, they communicate faster, but they settle through the banking system. It's not a completely accurate representation, but it's kind of what's happening, right? Layer 2s are supposed to have the security of the banks, but they're supposed to be working faster than the banks, which is actually not that difficult, through better technology.
Cool. I'm sorry, Howie. I'm not deliberately. Well, I am deliberately skipping over you, but the reason being that we've got to crack on. And why don't you lead with this? If you're comfortable, let me know if you're not. Because I mean, all you guys know everything at Immutable, obviously. Of course you can, mate. Difference between layer 1, layer 2, and then we'll just quickly rattle through. But if you guys have nothing to add after Howie's comprehensive answer, let's move on to the next question. Thank you, sir.
Put me a bit on the spot there. Full disclosure, I was subbed in like literally an hour ago. So I'm not the resident expert in layer 2 at Immutable, and thank God I'm not, because I'm probably going to butcher this answer. But how I understand layer 1, layer 2, and just to follow on from what Arturo said, is basically layer 2 is, you know, a way of almost like compressing and condensing these transactions into a single block that's executed on layer 2. It requires the fundamental infrastructure on layer 1 in order for it to operate. And so the reason why you see so many layer 2 Ethereums is because the layer 1, being ETH, is the most robust and secure of all layer 1s, right? And so what happens is layer 2 inherits all the security and like authentication of those layer 1 and relies on that to provide the proof for the layer 2 transactions.
You sound like an expert. That was very good. Yeah, so I guess the biggest thing with rollups and what is inherent in a rollup is that, you know, as Arturo said, that they inherit the security of the base layer. So that's substantially different from something like a sidechain like Polygon and a Polygon sidechain solution where they have their own validator set. And you have different, you trust different parties and you assume different risks when you kind of move around to these different products. And that's something that we're seeing a lot when we're talking to clients where they say, what should we use? What should we think about? And it's like, it's entirely a commercial decision in a lot of instances. Sometimes there are some legal considerations. But yeah, it's interesting how you trust different things and people call these things trustless. And really you're just moving trust assumptions around in different areas.
Yeah, if there's anything to add to that, I would say that if you're running an Ethereum node, that's different to actually running a layer 2 node. You need to run both of them, right? That's different types of software. The second software is dependent on the first software, right? But in practical terms, they are different.
Thank you, Kat. Thank you very much. Use cases. So you made a point before, well, all of you made this point before about you're trying to get over the congestion issues of the layer 1. So if a layer 1 is super robust and it's really popular, then it's going to get jammed with transactions at some time. And I know I'm, along with Nathan as well, and a few of the others here, we're part of an amazing DAO that you should all join immediately called the Dead Diamond Society, which has got the most exciting PFP profiles ever. Shameless plug. We were looking to get some ape-related stuff around the time of the Bored Apes, and it was just absolute carnage. I mean, the poor guys in the Discord were trying to kind of say, "Shall we do this, guys? Shall we do this?" And gas is just going, and then trying to, you know. So it was very, very challenging. That kind of leads into use cases of layer 2. I guess it's down to congestion, but are there any other things that you'd add around? It's just kind of, you know, adding capacity to an inherently robust layer 1. Anything to add, Howie, sir?
Not really anything to add there, unless you guys have. But I mean, to answer the question of what are some of the use cases of layer 2, well, I think any feasible application that you can have layer 1 should also operate on layer 2, provided that the layer 2 is EVM compatible. I won't go into too much about how that works. But needless to say, Immutable believes that gaming is going to be one of the primary drivers of crypto adoption and blockchain adoption. And the reason is because the Immutable founders, they started off trying to build a game on layer 1 Ethereum back in 2017 called Etherbots, if you guys. Anyways, that did not did not take off. But another reason of why it did not take off was it was just prohibitively expensive. It was too slow. It couldn't work. And the example given by Shane about shooting bullets, there was no way that you're shooting bullets on layer 1, right? They would be so slow and so expensive that you could, I don't know how it could possibly work. But on layer 2, you can have scalable transactions. Immutable does, I think, 9,000 transactions per second, which can be scaled up further than that. And as a result, like gaming, even to be honest, even at 9,000 transactions, probably not what we call planet scale, not something that will power every single bullet being fired, but it does get us there. And then there are potentially solutions to layer 3, which is another roll-up of layer 2 that can scale onwards from there. But that's again maybe a bit too far-reaching. I'll pass it on now.
Well, thank you. That throughput issue, I think, is really important because a lot of our clients are kind of, looking to kind of put out financial products, loans, those kinds of things. And a question that we always consider is, things like when is the settlement of the actual thing? What kind of throughput do you need for your product? And when they come to us and say, what kind of blockchain should we use? We need to kind of go back to the question of what kind of product are you issuing? What do you need to happen with that product? So layer 2s kind of give you that that throughput because you're able to multiply throughput through batching multiple transactions down every now and then depending on what kind of roll up you use. But then there comes like additional assumptions that you need to make. So with an optimistic roll up, for example, you have a 7-day fraud window and someone can dispute something if a transaction has been input invalidly. So you're relying on someone to submit fraud proofs, for example. With a ZK rollup like Immutables, you don't have that, but you might have other assumptions as you would assume maybe the ZK maths is correct, for example, or if there's someone at the top that's an operator and putting together transactions, there might be some kind of element in trust of what they're doing. And then it always comes down to how long does settlement take? Because there might be things in the contracts and the agreements that are contingent on settlement. So optimistic might be 7 days, depends on the platform, because you have that fraud period. So the question is, when does settlement happen? When is it final? Whereas with ZK, it might be a little bit shorter because you just wait for it to batch down. Those are things we kind of think about.
From our point of view, we have a project called TradeFlows, where the basic idea is that you, as a business, can describe your trade, mint an NFT that describes this trade, and then you can actually have cash flows linked to this, let's call it invoice or trading description, right, to the NFT. Now, if we want this thing to be useful, we can't have a scenario where you're going to create a trade and it's going to cost you $1,000 because everybody else is using the system, right? So from my point of view, it's about user experience, right? And user experience is really about speed and cost, right? So layer 2 is a necessity, I think, for any system out there that actually is going to offer. I mean, it's not even about scale, right? If you hit a period of time where you need to use the system, but everybody else is using it, then it doesn't matter if you're just one person. It's going to cost you a shit ton of money, and it's going to take a lot of time, right? So it really is about that user experience and getting utility out of blockchain and not just have it as a speculative platform, let's put it that way.
Thank you, guys. Appreciate it. I'm conscious of time, and some of you, like Marco, has already fallen asleep. Oh, no, he's not. No, he's there. Okay, sorry, dude. Sorry, brother. I thought he'd already rolled over. I'd love to throw it open to audience questions. We've got a few more here, but I reckon these can be captured by audience questions probably as well. So who has got a burning layer 2 related question? This gentleman with the awesome red hat. Here you are, sir. What's your name and where'd you come from?
I'm Aaron. I'm from the internet, I guess. Nice to meet you. This is actually an anti-layer 2 question, because there was big news that DYDX, a leading DeFi protocol, decided not to use Starkware, and they want to build their own, they want to go back to their own layer 1 system, Cosmos. So what are your gentlemen's thoughts on that?
Thank you, our friend from the internet.
It's an interesting one. So we go back to the general thought, which is that Ethereum is the most safe, it's the most secure kind of blockchain. The reason is why. Is it because it's a technological achievement? Probably not. It's because there's a shit ton of money on it, right? If you want to achieve the same type of security, you're going to get a lot of people to use your nodes and put a shit ton of money on it. So I think that unless you're able to prove that you have wide adoption, it's a really risky move. Now the XDY are big, so they can choose to make those types of decisions, right? But if anybody else wants to go out and build a product, an actual user-friendly protocol, and make people feel comfortable that your protocol is going to do what it's supposed to do, you need to leverage off the capital that has been deployed through a chain. So for Immortals, I think that L2s are the only way where you can actually achieve that.
Yeah, just quickly, I think it was a really interesting move, and I totally agree that security is going to be a big issue because they're going to need to bootstrap security with their own token, which is what they're planning on doing, and that's obviously something that's inherent in a roll-up. But then again, that gives them flexibility on how they design the actual platform, and they can kind of leverage all of that in a more robust way rather than relying on another vendor. So again, it's a commercial decision, and I'm really keen to see how that pans out.
Yeah, good question. Yeah, I think look, the way I think about it, given that we are a game building on layer 2, there's 3 reasons why I could think of why I would not want to build on layer 2. First is, I think, from a technical perspective, layer 2, by virtue of the crazy technology that is zero-knowledge proofs and how relatively new it is, there are a lot of technical challenges to building a layer 2. Immutable, as an organization, we're committed to trying to solve those technical challenges. And one of the ways that Immutable does so is it publishes its own games and it encounters the problems that other partners may encounter, and it needs to solve them first in order for it to survive. The second reason, I think, is maybe commercial. If you own the blockchain, you probably, there's probably some sort of like incentive interest alignment going on there. I'm not sure exactly what it is, but that's what I would imagine. And the third thing, I think it's better risk and control. We have the ETH merge coming up. Rothstein is being depreciated. That's the testnet for ETH. They're using Goeli. I can't pronounce it. But anyways, we as an organization, as Immutable, as Guild Guardians, we have basically zero control over that. I mean, we interact with the Ethereum developers and we try to get timelines and schedules. But we have a game that is meant to be launching in September. The depreciation of the Rothstein testnet will affect us, and we have no ability to actually impact that. So, yeah, that's my response.
Harrison Dell had a question, but he's had a lot of mic control this evening, along with shameless shilling. Tim Lee at the back there, give it up for Tim Lee. He's possibly one of the most handsome over 60s men in... Oh, sorry, was that... Sorry, okay, there you go.
Yeah, thanks for that. That's great, yeah. My question would be very simple. If ETH2 actually happens, which obviously it's been happening since 2019, other than Immutable, which I really get, they're focusing on gaming, makes sense, what happens to the rest of the layer 2s? Where's the competitive advantage?
Good question, Timmy. Get in there, son. Who's going to take that? No, okay, go on, yeah.
I think it depends on the layer 2. If you go down the Starknet route, it is a completely orthogonal or different type of technology. So the costs of whatever happens on layer 2 are going to be dependent on the costs of layer 1, because every transaction is effectively going to also settle in batch on layer 1. So if layer 1 becomes cheaper, then layer 2 should become even cheaper. Now, if we're thinking about having a proof of stake on top of kind of a proof of stake, I'm not really sure how that's going to play out. So I haven't worked with Arbitrum or Optimism, so I really don't know how they would be compatible. But having worked with Starknet, I think that they would work quite well together, to be honest. Just lower fees overall.
Sorry, what was the first half of that question? Great question. Now that I know what it is. So you mentioned something like sharding. So that's been in the roadmap for a while, and I think it's got quite a while to get implemented because it's quite complex. So in a way, roll-ups are a solution for now. It might be the case that down the track, roll-ups don't get traction. People prefer operating on mainnet. But at this moment in time, in high areas, like areas in the market when there's high traffic and fees are really expensive, roll-ups are kind of all we have in terms of scaling. Nothing else has really worked, particularly in respect of EVM compatibility. And I think upon the merge, we're not going to see any real change in price. And I'm personally quite bullish on the whole ecosystem, so I'm kind of biased and think that block space is still going to be limited going forward, and it's going to become more limited going forward. So I think doing something is better than doing nothing in a way. In respect to Optimism and Arbitrum, I think that those things will be okay. I think that all of the teams are looking ahead at the merge, and these people are all significantly smarter than me. So I'm pretty confident in the ecosystem. Oh, thank you. I'll get that framed. Yeah, but I think that roll-ups are a good solution, and that we aren't really going to see ETH gas fees like we did, 6 years ago, is my answer.
Yeah, so I previously mentioned the idea of planet scale, and it's something that we at Immutable sort of think about. How do we scale beyond the current scaling solutions? And I guess one of the things is, well, basically, if ETH makes it cheaper and that necessarily scales L2, maybe we won't need the layer 3. And, like from Immutable's perspective, I think we've always thought that the merge is actually beneficial for the ecosystem. If Ethereum is more robust and it is more competitive against rival L1s, then that makes the L2s that build on Ethereum also more competitive.
No, it's a very fair point. Thank you, everybody. In the interest of time, I think we might wrap up there, and we'll have some good old-fashioned networking. Is there anything... Oh, yeah, make sure you've signed up to website, Discord. Have you done your POAP things? Does anyone need the little POAP thing? Oh, sorry. What? Who jumped in? That's bullshit. Mother flumpers. So can you be front run? You can be front run on a POAP by some fucking bot that's just gone and... That's bullshit. We're supposed to be in the industry and know all about this shit. That's so embarrassing. Who is working on a security protocol for POAP? No? No one. Right, there's a development goal. Nathan, all right, for the Zipmex people. Fucking POAP protection thing. Thanks, it's been real.
Thanks, Nick. Thanks to our panelists, Howie, Jazz, Arturo. Thank you so much, everyone. Thank you. And thanks to Nick for being the MC extraordinaire. Guys, yeah, big thank you. So networking, bit more drinks. We'll probably wrap up in about half an hour or so. Some of us are going to stay and like pack up. Some of us actually go, maybe we might go to establishment for drinks. Maybe not establishment. Probably either establishment or there's a pub called Republic just up the road here. So we'll probably go Republic. We'll go Republic. There we go. I'm getting the votes coming through. It's Republic. So stick around for half an hour while we pack up, mingle, join the Discord, defi.org.au. Thank you so much for coming.